Let's check in on Alibaba's shares soaring today. Look at that, up just about 14%. Now the move higher comes on plans for the company to split into 6 divisions. Yahoo Finance's Rachelle Akuffo is here in studio from DC. Rachelle, it's so good to have you here at the desk. So tell us just exactly what this is in store for Alibaba and the reaction that we're seeing. Clearly lots of excitement.
Now, this was something of a surprise. A lot of people, they saw Jack Ma reappearing, wondering what was going on. And then the very next day, we have Alibaba using this holding group strategy here, which is really a rarity in China, dividing into 6 business units. So these are going to be Cloud Intelligence Group, headed by existing Alibaba CEO Daniel Zhang. Also, the cloud and AI business, very profitable. And you also have the e-commerce, which also includes Taobao and Tmall for all their shopping needs. You also have Cainiao's smart logistics operations. You also have the local services group. That includes things like their food delivery service at the ground level. And Global Digital Commerce Group, that's their international and cross-border e-commerce. And lastly, Digital Media and Entertainment Group. Each of those units are going to have their own CEO, also their own board of directors. But just to clarify, Zhang will still be the CEO of the holding group, but he's going to delegate operational decision-making to the heads of those 6 units. Now, Zhang said the market is the best litmus test, and each business group and company can pursue independent fundraising and IPOs when they're ready. Now, in terms of how big this is, earlier I spoke to Thomas Hayes of Great Hill Capital. He calls this a historic day for Alibaba, and great news for shareholders who've been really waiting to unlock some of the value in the company. He said this should also help Alibaba draw less scrutiny from Chinese regulators by not being such a behemoth. They were a target before when they were trying to pursue an IPO.
Cracking down on big tech. All right, some other examples of big tech doing a similar move, Rachelle?
Well, the main name that comes to mind is, of course, Alphabet. And that's when they changed their name from Google to Alphabet back in October of 2015. Now, their business units split into Google, what we know as the search engine, also Android and YouTube, Innovation Lab X, where they do their R&D. It's VC arms, which include Google Ventures and Capital G Management Company. And Calico, its health division. DeepMind, its AI unit. Several. I think by the time it got to February of the following year, they had 11 different units there. Now, this strategy allowed individual parts of the business to be more nimble, really test out some of these growth opportunities in the market. But of course, it has been a challenge to try and stay lean, especially post-pandemic. Google and Alphabet CEO Sundar Pichai looking to make Alphabet leaner and more productive under his Simplicity Sprint plan. So obviously, when you do have all these units, it is easier to try and spot where you can trim the fat. So we'll see if that ends up being the same situation for Alibaba.
We just talked about Amazon. I can't help but wonder. They're into healthcare. Could they break up the entertainment? I mean, I'm not saying I'm hearing that or we're reporting that, but that would be an interesting breakup.
They have options
down the road.
Yeah, we certainly have been under regulatory scrutiny. That is for sure. All right, Rachelle, thanks so much.
Good to see you.
For that.
Good to see you guys.
Great to see you. You got to come back and visit us before you go back down to DC.
I know it.